Hey, what is going on, my friends, and welcome back to another video on the My Stock Journey channel. So today I wanted to go over something I feel like it's a super hot topic right now, with the pandemic going on and with stocks going all over the place, volatility all over the place. A lot of people want to know, what are 3 monthly dividend paying stocks that even through all this craziness, even through all the madness, the volatility, the ups, the downs, the bulls, the bears, through all of this, what are some stocks that are going to pay me every month so I can consistently see these gains? It's very discouraging, especially to newer investors. Whenever you enter a time like this where you see you can see your stock drop 30-40%, and it's scary. It's very scary. And I feel like whenever you have a dividend that pays out, especially monthly, it keeps you in a positive mindset. It keeps you in a very just a good state of mind in investing, because you get to see these gains no matter what. And I feel like I wanted to really go over this because I feel like even though the market is looking good recently, I do think there's still some crazy times ahead, a lot of volatility. And I wanted to make sure that I gave my opinion on some good monthly paying dividend stocks from a few different sectors that could maybe help a few people out, or maybe give some people ideas on other stocks to check out, anything like that. I have one. It's a real estate investment trust. I absolutely, if you've been on my channel, I absolutely love this. If you've seen any of my past stock portfolios, I love REITs. Secondly, I have a business developing company that focuses more on loans and more of like the financial sector. And lastly, I have an ETF, and a lot of people can't really go wrong with ETFs, especially my more conservative viewers, the ones who like to play their cards a little bit safer, lower risk, lower reward in that sense. And so with that being said, I wanted to make sure I covered a few different areas just in case, you didn't like this one, but you might like this one, so I could appeal to as many people as possible. If you guys do like this video, don't forget to drop a like. It helps me so much with the YouTube algorithm. It helps me reach new guests, new audiences, and it really just really brings new viewers to my channel, and I absolutely love it when you guys smash that like button. It tells me what you like, what you don't like to see, what you do like to see, and it kind of helps me understand what videos do better than others so I know what to upload in the future. If you are new to the channel and you do find this video helpful, enjoying, entertaining, anything like that, go ahead and hit that subscribe button. It'll also help me out a lot. And if you have any feedback, future suggestions for videos, anything like that, definitely let me know in the comment section. And yeah, let's get into the video. So first off, we're gonna jump into our business developing company. It is Main Street Capital. Now, I know I've talked about Main Street Capital a few times in this channel, but I couldn't make top 3 monthly dividend paying stocks that I like without including Main Street Capital. It's one that I've invested in. I've invested over $1,000, maybe coming up on $2,000 soon. $2,000 in, and I honestly cannot complain. Like, I've seen super good gains, and I believe I'm going to continue to see amazing gains in it in the future. And I wanted to definitely make sure that I included it in this video. As of right now, Main Street Capital is sitting at a stock price of $32.66. That's not honestly too bad. Its 52-week high is $45.10. Its low was like $14. So it is, it has recovered a lot, but I definitely think that even though it's close to its 52-week highs, I think it bypasses and surges way past that 52-week high. I think it was just starting to catch its momentum, and I think as all this started to happen, it kind of slowed down the snowball a bit. But as momentum picks up and it just continues to get better, the economy starts to grow, and it starts to, we start to move past all this, I do think that they're going to bypass those 52 weeks high at ease. And so with that being said, that stock price definitely has a lot more room to grow if you are into dividends as well as growth in the stock value. Basically, what Main Street Capital does is it focuses on smaller businesses, usually businesses with around $10 million like market cap. Nothing too big, nothing too small. They like to focus on kind of like right in the middle. There are 175,000 smaller operating businesses in the country, according to their website, their biography. And so with that being said, they feel like they have a lot of room to grow. There's a big market that they can appeal to, help give those loans to. And with that being said, they give loans to these businesses, and they either do one of two things. They give a loan to a business, and that loan has interest. That interest provides them with income. That income is usually somewhere around 11% on the loan that they charge in interest, which is honestly not bad. 11% returns on a loan is pretty good, actually. Also, they buy pieces of these businesses. It's almost like they invest into these businesses. So they get equity, and with that being said, it allows them to collect dividends from a lot of the businesses they own. I think last year they said they earned somewhere around $30 million in dividends, which is amazing. That's a super good, super steady source of income for this business. And that's another reason why I do believe it's safe, especially in times like these. They have a lot of different streams of income that provide them with the availability and provide them with the cash flow to, give out their own dividend. Right? Currently, their portfolio holds 182 different companies, over 50 different industries. That is super amazing to me. That is something that I like to see. I don't personally believe that an individual investor needs to over diversify his portfolio in order to, be safe in a sense. And I kind of do agree with Warren Buffett that if you're diversifying, it means you kind of don't have faith in those stocks that you're buying. My portfolio only has like 7 or 8 stocks. Each one is a little bit different than the next, but that's because I do believe in each one of the sectors. Whereas I feel like some people will just buy 5 different REITs, 5 different banks, 5 different, and I feel like that's just because you don't have as much faith and confidence in your stocks that you own. So you're like, well, just in case this one goes down, I have this one, right? I don't believe that an individual should over diversify, but I do believe that if you're going to own a stock like a REIT that has its own portfolio, that portfolio should be diversified. If that makes any sense. I invest in companies who are diversified, but I don't over diversify myself. And that's just because I feel like it just makes more sense to me, and it makes more sense as an investor to make sure I'm putting my money in the right places that give me the confidence to hold on to them for the long run. Main Street Capital is currently sitting at a 7.18% dividend yield. I think at the time that I got paid out dividends last, I had like 62 shares, and I made like, I'd like to say like $15 roughly in dividends. I know I am currently at 100 shares, which is super nice. And I'm sitting at making about $20.50 every single month, which I love that. It's such a good feeling. It's such a like a knowing feeling like, okay, I know I'm going to make this. I have faith that their dividend is very safe. And so with that being said, it makes me very confident knowing every month, $20, I can use that mentally, because I'm obviously not going to take it out. I do have drip, so I just reinvest every dividend I receive. But the thing about it is, I think about it like this, like $20 with my car, like that's like a full tank of gas almost, right? Especially right now. And so that kind of, whenever I think about, say, my net worth, I'm thinking, well, I'm spending $20 to get a tank of gas, but my portfolio increases by $20, so it kind of evens out. And so it kind of gives me that boost of confidence, like, okay, I'm doing something right, I'm having success, and success can become in all shapes, sizes, shapes, forms. Success could be an extra $1 a day. Success could be an extra $1 a year. It's totally up to you, and that's your mindset. My mindset is that the dollars that I make that I wouldn't have made if I wasn't in the market is a success. And so with that being said, that, dividend, that monthly payout makes me feel super well. And that's why I believe Main Street Capital is one of the best monthly dividends that there is. Next up, this is my very first long-term holding in my portfolio. If you have been on the channel a while, about a month ago, I kind of talked about this stock, and I haven't really talked about them since. It is the only holding I have on my M1 Finance account, and that is Stag Industrial. Now, Stag Industrial is one that I feel like a lot of people subconsciously know about, but they really don't think about very often. And I do think that is I feel like that's a very sad thing, because I believe this stock is very, very strong. Stag Industrial is a real estate investment trust, meaning that they own different individual properties in which people rent out, lease out, whatever, and then they pay Stag Industrial to like utilize that land, right? So with that being said, they are in over 38 different states with 456 different properties in which they own. I think their enterprise value is somewhere around $5 billion right now. Millions and millions of square feet of building and property ownage, and that is absolutely phenomenal. During times like these, they actually didn't do too bad. The stock price did drop down a good bit, but it didn't drop down a significant amount, in my opinion, considering the real estate investment trust, the other, comparable stocks to Stag Industrial. But with that being said, Stag Industrial has been doing very well through all this. Their tenant payout honestly didn't drop below 50%, which is amazing, meaning that everyone who was utilizing their land or renting it, leasing it, was continuing to pay their rent and that. So Stag Industrial didn't lose a massive amount of money. And so that's also amazing. Stag Industrial is currently sitting at a $29.48 stock value. Honestly, that's really high at the moment, and it doesn't surprise me in the slightest. Like I said, Stag Industrial is a very, very, very strong company. They have a very strong balance sheet, and it's very appealing to anyone who looks at debt, who looks at numbers, who looks at income sources. Stag Industrial is very, very strong. Their 32-week high is like $33. Their 32-week low is like $16, and they're sitting already back at $29. Almost a full recovery from this whole thing. Over the last 5 years, they have been consistently growing. The company is like 11 years old now, I do believe. But over the last 5 years, there's been consistent growth throughout pretty much the entire time. A few moments of droppage, but honestly nothing that bad. And it kind of just shows how durable this company, this stock, anything like that is. It can go through one of the worst economic moments, thinking, okay, the whole world just closed, and it just ate it up real quick. Boom, right back, bounce right back. We're back. You know what I mean? And that kind of shows, in my opinion, the durability, but not only that, the strength of their management. The management team made the decisions that needed to be made in order to keep them afloat. But not only afloat, they were swimming, you know what I mean? They were continuing to grow and continuing to go throughout all of this. And so that is very, very appealing to me as a monthly dividend investor, because I want to invest in these companies that I know can withstand the test of time. These companies that can hold on and hold through some of the craziest moments that the world is going to offer, because as time goes on, stuff's just going to get more crazy, right? The next thing like this is going to be even worse than this one. And so with that being said, I want to make sure I'm invested in companies that can handle it. And Stag Industrial is a company that I can handle it without any doubt in my mind. Currently, they have a 4.8% dividend yield. Perfect for me. That's right on. I really like companies that have between a 4 and a 6. You know, some people say 3 to 4, but I like 4 to 6. I do believe that that's fair, especially right now. A lot of stock prices are low, and these companies I'm talking about didn't cut their dividends at all. And so that means their percentage is obviously going to rise a little bit. It pays about $1.44 per share that you own. I own like 63 shares. So I get paid like $7, $8 every single month from this stock. And honestly, I could not be more happy. It's probably going to be one of the stocks that I bought the earliest. I'm going to hold on to the longest, simply for the fact that I can't envision them going anywhere. And so with that being said, Stag Industrial is another very, very strong monthly dividend stock in my opinion. So last up, we have our ETF of the video, and that is SPHD. This ETF basically tracks the least volatile but highest yielding dividend stocks that are on the S&P 500. And I don't think you can really go wrong with investing and stocks that are in the S&P 500. You know, there are some that aren't doing the best, they aren't doing amazing, but I do believe they're still, if you're on that list, they're the ones that are kind of driving our economy. And so I don't think it's a really bad thing in a sense to invest in those. The only thing I will say about investing in an ETF is that unless you would personally invest in every 50 stocks that it owns, it couldn't necessarily not be the best idea. But if, like, you know, if you do like to be like me and you like investing in companies that are diversified, then it definitely could be a good play. It's in some very, very good companies. And so with that being said, I can't see that being an issue. If, like I said, if they're on the S&P 500, I feel like they're a little bit more stable in a sense of withstanding the test of time. And so with that being said, I do believe that it is a very strong buy. SPHD is currently sitting at a stock value of $34.33, with its 52-week high being right around $45 and its low being right a little bit like right above 25, like 25.38 or so. And so with that being said, it's another one of those stocks that has made pretty significant recovery since it hit its all-time low on March 23rd. And so with that being said, it's definitely has some room to grow. I don't think of all of these, I don't think this one's going to yield the most returns in a sense of growth of stock, but I do believe that is one of the safest in a sense of continuously paying out these dividends. It's another one that pays out monthly, and it is super, super, super diversified. And so with that being said, it could be a little bit safer. It depends on your, you know, description of safe. The current dividend yield of it is 5.38%, which is right in my range. It is one that I don't hold yet, but I do intend on getting in very soon. I think with the market volatility that's going on right now, I'm probably going to wait until there's another downturn, because I just believe that the market's not just going to come straight up. Just everything going on in the news is good and bad and good and bad, that every day it could be 50-50 where it goes up or it goes down. And I think with the good week that we've kind of had recently, I'm going to wait for it to come down a little bit more to go in and really make sure that I'm getting those gains that I'd like to see. But honestly, if someone wanted to buy this stock right now, I honestly wouldn't blame them. Now, this is not financial advice to go buy it, but I'm just saying personally, I wouldn't blame you if you wanted to go buy it. And so with that being said, this is probably the most self-explanatory stock on the list. You know, it just tracks the least volatile, highest yielding stocks on the S&P 500. And so with that being said, it could be a very good play for those of you who love ETFs and those overly diversified stocks. So that will call it a close to this video. If you guys did like this little style of the video, you know, I kind of switched it up a bit. I usually talk about my stocks and I talk about my journey, and I'm talking about more like that. But a lot of you ask me questions about what are some monthly dividend stocks you like, what are this, what are that. And so I figured it could also be a good way for me to expand my knowledge and kind of give the things I pick up to you guys as well, because that's honestly what I'm doing this channel for. Pick up, go through my journey, learn lessons, and give them back to you as well. And so with that being said, I really actually do like making these type of videos where I kind of just talk about, hey, these are 3 monthly dividend stocks I like. These are 3 REITs I like. These are 3, you know, financial sectors, banks, you know, whatever stocks that I like. And so if you guys do like these type of videos, definitely let me know in the comment section below. It'll help me out a lot, and I'll know, hey, maybe you guys want to see my 3 favorite bank stocks or my 3 favorite real estate investment trusts. Just let me know down there. Honestly, If you ask, I probably will make it the next video. Like, every time I've gotten a comment suggesting a video, I make it the next day, because that is just because I want to make sure I'm giving you guys the best content I possibly can. Once again, go ahead and drop a like if you did enjoy this video, especially if you made it this far. Thank you so much. Hit that subscribe button if you're new. Drop any feedback in the comment section. I'll see you guys next time. Peace.